This is Daybreak Asia. We're counting down to Asia's major market opens. And Haidi, the big story, it's still that consistent theme. What is the Fed going to do? How many rate cuts are we going to have this year? What does that mean for currencies? And in this part of the world, we're really focusing on the Korean won and the Japanese yen, of course.
Yeah, and perhaps a growing inability for policymakers in those two economies to be able to do anything to support any further weakness in those currencies, right, if we have a further leg in dollar strength, which is very much expected. But there are really some questions being raised. Well, you know, in terms of the inflation being so stubborn in the US, did the fact that the Fed actually flagged easing into the end of last year potentially encourage that scenario? But let's get you to the opens.
Yeah, we've got Japan and Korea, Australia also starting to trade here. But the focus, as we said, on currencies at the start of the day. And you're watching that Japanese yen holding fairly steady here, but still around that 154 mark. Some investors we're speaking to or traders are saying 155. That's the point where we see intervention. Some saying that 160 could be the next line in the sand. But certainly, as you said, Heidi, it's the question really of how meaningful and how substantive, how effective would any sort of government intervention be when you've got that ongoing yield gap between the Fed and also the BOJ and the yields there. But what we are seeing here for equities at the start of the day is a little bit of pressure. It's following what happened in Wall Street overnight, of course, because we had the S&P 500 on its longest losing streak in several months, and really big tech bearing the brunt of that. Earnings, of course, really in focus, given we've got a number of big tech names reporting over the coming days, and that also could give clues on the health of the US economy, but also whether we're going to see any sort of big AI-led rally sustaining the momentum. But let's change on, take a look at what's happening in Korea to start the day here. The Korean won a little bit firmer here against the greenback, 0.6%. But broadly, we are seeing equities, again, just modestly in positive territory. FX has been a big talking point. The IMF spring meetings are underway in Washington, but actually we know that we do have the finance chiefs from the US, Japan and Korea meeting, and they're all, Heidi, expressing some concern, as we also hear from the Bank of Korea governor saying that the won levels are really diverging at this point from the fundamentals.
Belle, take a look at how we're tracking when it comes to the first couple of minutes or so of trading in this staggered start to the open here in Australia. This is the ASX up about 0.2%. As we wait for more of the market to come online, we are seeing already quite a bit of leadership there from the likes of materials, consumer discretionary also doing okay at the moment. We're focusing on some of the big names like BHP. They earlier reported some of these production numbers, iron ore output rising despite some of the weather-related woes, and of course the downside demand story from China there as well. So a pretty good picture for BHP, essentially shrugging off some of those concerns. We're also seeing Australian bonds opening the session higher. That 20-year auction in the US attaching some pretty strong demand there. The Aussie dollar also extending that bounce before we have local jobs data due as well. Expected to see a pullback in those March numbers after a big jump that we saw in February that was quite surprising and to some sort of statisticians a little bit of a question mark over that. Take a look at oil as well. Brent crude up by about 0.3%, holding that pretty sharp drop overall, though. We did have US stockpiles expanding to that 10-month high, so sort of balancing out that largest decline that we've seen in 3 months for crude. And, of course, watching treasuries, we saw that big jump across long duration demand with that 20-year treasury auction with quite a bit of participation there, and the sort of warning when it comes to potentially higher for longer continuing to play out here. Let's bring in for more our executive editor for Asia Markets, Paul Dobson, joins us now. And so the drumbeat of stubborn inflation, higher for longer, rates will stay here as long as it's needed. Potentially we won't get to easing at all this year. Is it finally starting to price through to markets?
Yeah, well, I mean, I think so. The odds are being priced in for what the Fed's going to do this year is less than 2 cuts. If you look at market pricing, and some of the enthusiasm for equities has gone off the boil a little bit as well in recent days, although we're also heading into earnings season, of course, which tempers those bets as people wait to see whether that can be delivered too. I think what has been really interesting overnight is what Belle was alluding to, this meeting between Japan and South Korea and Janet Yellen, where they appear to have come away from it with a kind of implicit green light from Janet Yellen to be able to intervene in the currency market if they feel the need. And, the commentary that came out of Japan and South Korea, we heard Kanda saying this is a serious concern. Make no mistake, serious, he said, read it carefully. It gives you a sense that both authorities in South Korea and Japan are really vexed by this and ready to move and don't feel that there would be anything to hold them back now. So it's no surprise for me that you see some gains for the won at the start of the trading session, and we had a little bit more of the strength and recovery in the yen as well overnight.
Paul, beyond the Fed and what we see in currency markets, another big focus, of course, for investors is what we're getting out of earnings. So we had the ASML numbers overnight. That's Europe's most valuable tech firm, of course. Not a great outlook coming through from the company. Do you see that casting a shadow at all today?
I think that's going to be very important for the Asia chip makers. They're going to be paying a lot of attention to that. We saw some weakness in the Magnificent Seven US stocks overnight, Nvidia particularly. So yeah, there will be a little bit of weight on our markets as people continue to assess just how strong that demand is for chips and for AI. We also get the earnings from TSMC later, so of course that's going to be absolutely crucial for what it all looks like in our region, and particularly for equities in Taiwan and the overall benchmark given its weighting there as well.
Yeah, and of course, actually, Paul, I should mention as well, Asia Executive Editor for Asia Markets, Paul Dobson there. But Paul, the TSMC earnings that are due out, we'll be watching those very closely, and the CapEx outlook in particular. But what else we're tracking so far, as we said, it is the chipmaker story in the session so far. TSMC numbers that are on the docket, but ASML, as we were just discussing there with Paul, coming out with its earnings and really disappointing investors as well, given we had a forecast for sales that came in below analyst expectations. So concerns there around the demand outlook. That's going to be a really key theme to track in this session. So that's the state of play there. Chip makers, another group of stocks that we're tracking in the session so far are the miners as well. What we've got for production figures that are continuing to come in from different names, but Santos is one of those. Just a few moments away from trading still for Santos, staggered start for Sydney, but we do have most of the miners moving a little bit higher in the session. BHP, another one, we've seen their iron ore output rising despite rain, despite the concerns around China demand, and actually that's been a really key dynamic in the metal story, of course, Heidi. It comes down to what's that demand outlook from China looking like, what's the health of the economy looking like as well.
Yes, and how tenuous are these relationships on a geopolitical level too, right? Because, Belle, we've been reporting President Biden threatening these higher tariffs on Chinese imports. He's seeking to win over union workers ahead of the November election. Biden met with members of the United Steelworkers in Pittsburgh on the second day of the three-day swing through the battleground state, I should say, of Pennsylvania. Take a listen.
They've got a population that is more people in retirement than working. They're not importing any. They're not bringing. They're xenophobic. Nobody coming in. They've got real problems.
For more, let's bring our Greater China editor, Jenny Marsh. And Jenny, we know that from Beijing and Washington, both sides understand there's a degree of domestic political posturing when it comes to these things. How much of this is sort of based on policy, and how much of it is positioning before November?
It's an awful lot of election posturing right now. I mean, obviously there are deep-seated and real concerns in the US around the Chinese economy and their industrial policy. But I think you can just see from the proposal on the steel tariffs and aluminium tariffs that Biden was talking about overnight, America doesn't actually import a lot of steel or aluminium from China since the Trump-era tariffs. So he's really signaling to these sort of industries where the unions are very strong and he has a lot of sort of core voters that he's going to be tough on China. But, those actions are actually sort of largely symbolic. The shipbuilding probe, however, is something which really could hurt China if they do end up sort of trying to clip China's ability in that area. But at the same time, the fees that he's proposing, sort of slapping on Chinese-made ships when they dock in American ports, are likely not really going to move the needle. In fact, they might just hurt the American economy as, these they have to sort of they become less competitive, frankly, than other places.
Yeah, a little bit more bark than bite, I guess, Jenny. But how much does this sort of set us up or set the tone going into the US election?
The tone right now for China, I think, is concerning. You see there's a slew of industries that are sort of realizing there's now this very, very hawkish election on China on both sides, the Republicans and the Democrats. And all the industries, a slew of industries are sort of piling in. Even the aviation sector in America last week was calling on Biden to block new flights from Chinese airlines, saying that Xi's pro-Russia stance was anti-competitive. So, you have EVs or pro sort of more scrutiny on Chinese cranes, ships, aluminium, steel, the whole gamut of industries right now. So I think for China, this is a very sensitive period because though while a lot of it's election and posturing, if some of these probes lead to sort of tariffs and longer term curbs, as we've seen from the Trump era, it's hard for subsequent administrations to roll them back. So the best thing for Beijing, I think, is just to try and keep sort of its head down, respond as it can, but sort of not retaliate too strongly to try and mitigate the impact of this election season.
They've already vowed retaliation when it comes to the probe into the shipbuilding industry, all measures necessary, right? But at the same time, we're hearing reporting that Secretary of State Antony Blinken will be headed to China for a 4-day trip on April 23rd, and this will just be the latest high-level US official to visit. How important is it that we're continuing to see this engagement at a very high level?
I think with the election season being so tense, the engagement is really important. And I think sort of the expectations for what Blinken will achieve during his trip are going to be quite low. He probably isn't going to come out with any deliverables, but the fact that they are still talking is just going to stabilize that relationship in this very sort of volatile period now, which is only going to get more volatile as we get closer to that November vote.
All right, that was our Greater China editor, Jenny Marsh there, and still ahead. TSMC expected to report a rebound in earnings growth as demand for chips used in AI development boosts profits. We preview those results with the Futurum Group later this hour. But first, EQT Asia joins us to discuss M&A trends in Japan and the impact of the country's corporate governance reforms on the private markets. More ahead. This is Bloomberg.
U.S. Steel has been an iconic American company for more than a century, and it should remain a totally American company. American owned, American operated by American union steelworkers, the best in the world, and that's going to happen, I promise you.
That was, of course, President Biden earlier vowing to keep US Steel American-owned. And take a look at how Nippon Steel is trading at the moment, up at just about 0.2% actually. Guaranteed to stay US-owned, President Biden telling steel workers, union workers in that key swing state of Pennsylvania on this 3-day trip there. On that same trip, he also has proposed raising 301 tariffs on Chinese steel and aluminium. All of this as we see this kind of political positioning and engagement with union workers ahead of the November election, talking about this iconic American company. Take a look at how we're faring when it comes to the Japanese trading session in Tokyo. We're just about 15 minutes into the state of play there. Quite a bit of downside. We were expecting that as US stocks extended those losses as well overnight, and we see that correlation. The Nikkei 225 down by about 0.7% there. Chipmakers in particular in focus as we see the rest of some of these sectors really under pressure, but a lot of earnings coming through from that sector. TSMC, for example, Tokyo Electron as well to be closely watched. Our next guest runs the Asia business of EQT, an alternative investment manager with about $247 billion in assets. EQT says Japan is a top priority as a push to improve governance standards is leading to a wave of deals and potential benefits for shareholders. Joining us from Tokyo is Jean Zalata, who's the EQT Asia chairman and head of private capital. Jean, great to have you with us. So we have seen, of course, this broad wave of exuberance over this kind of new era for Japanese assets, right? Has that translated into your part of the business?
Yes. Hi, Heidi. Thanks for having me today. We see this wave of activity that's starting to happen as a result of the changes in governance and improvements in corporate governance in Japan. That's led to a lot of shareholder activist activity, and as a result, it's creating more deal flow in the private equity industry. There's also, I think, generally an understanding that the public markets are not necessarily the best home or efficiently valuing a lot of these businesses here. And we just announced the take private of a company called Benesse, which was a family-owned business, and we partnered with the family to take the company private. And it's one of the largest ever partnership deals like that. You could call it a management buyout, where we teamed up with the family to take the company private. It's a $1.8 billion transaction. And the thesis there is that we think we can really invest in the business for the long term, improve the governance, improve the execution of the strategy as a private company much better than we could do in the public markets. And we see more and more of these types of opportunities here in Japan.
The management buyout aspect is really interesting, right? Because does that sort of necessarily translate to major industry reshuffles? Do you see as this strategy as being one of the ways that we do see some of the inefficiencies being washed out?
Yes, I think the partnership strategy is interesting, but we're also seeing a lot of entrepreneurial activity actually in Japan as well, and that's another theme that we're investing behind. You know, we announced the investment in a company called HR Brain, which is a software SaaS business in the HR software space. And that's really more of an entrepreneurial-led company. And it's an example of how things really are changing here in Japan. And you're starting to see significant entrepreneurial activity at scale, tackling markets like the SaaS software market, which is a new emerging space, and really trying to gain share from the traditional client-server type established software companies here in the country.
Beyond software, which industries are you looking at in particular for different MBO targets?
Well, EQT, the heritage of EQT is the Wallenberg family, which goes back to the mid-1800s in the Nordics, and that's 5 generations of an industrial heritage. So our industrial focus and our industrial perspective on being really more having a mindset of being an owner of industrial assets as opposed to just being a financial owner is something that we think resonates very well here in Japan. And so we're very focused on working with industrial companies and helping those management teams and those companies reach their full potential.
There's been a perception in the past that perhaps directors, even within Japanese blue chip companies, could be a little bit hesitant to work with overseas firms. But are you noting a sort of shift in mentality perhaps that's taking place as well?
Yeah, I think things are changing for the better. I think, you know, the combination of the government taking the lead on this and coming out and saying that, you know, if your company is trading below book value, you need to do something about it, and you need to be accountable for that if you're a director of a company, a listed company. I think there's also been numerous examples in our industry here of private equity firms that have created tremendous value as owners of these businesses. And so directors of the boards of these companies that have sold those corporate divisions are feeling more confident, I think, about what happens after they sell the assets. I think there's been a fear in the past that if you sold a business to a private equity firm, that it would be slashed, it would be highly levered, and there would be all sorts of awful things happening. But actually what's transpired is that, and that's really our business model, is that we build companies and we future-proof businesses and we make them more successful and make them more profitable. And employees benefit, shareholders benefit, really society benefits. And I think that's, you know, the fact that that model is taking root I think makes it easier for the boards and directors of companies to view private equity as a force for good, as a positive force for change, and having a positive impact. And I think that mindset change is quite important.
John, are you seeing much of an impact when it comes to the sustained weakness in the yen in terms of the appeal of deals?
Yes, I think that's been a kind of a headwind for existing investments. The yen has really come down 30 or 40% in the last several years. So if you are not hedged, you would have really borne the brunt of that. However, that's been partially offset by rising valuations and rising stock markets, rising multiples. I think at this point, the entry point looks very interesting. And although we're not in the business of trying to predict currency movements, you'd think that entering at 150 or above in the yen is attractive from a currency standpoint in the longer term, as interest rates normalize in the rest of the world and become more comparable. I think generally we're very bullish on Japan, not really just for the currency reasons, but for a lot of the structural reasons that you're citing and what's happening here. We just think the market is poised for growth in terms of private equity investment into the country.
All right, that was Jean Salata there, chairperson at EQT Asia, and we'll have more to come on Daybreak Asia. This is Bloomberg. Taking a look at how currencies are faring in the session so far. Watching the Japanese yen, the Korean won there, both of those currencies fractionally firmer against the greenback here. We actually have been hearing from the finance chiefs of the US, Japan and Korea acknowledging the weakness and the pressures that those local currencies are facing. Aussie dollar, Kiwi dollar, a little changed as well at this point in time. But the broader story, of course, has been that resilience that we've seen in the greenback in that face of stronger US growth as well. But let's get more on the outlook for the dollar, because we are really, as we said, tracking what it means, these expectations around the Fed and where we go from here. But Haidi, I mean, when you've got the Fed saying, you know what, be patient, we can't cut too soon, it just tells you that we can really expect dollar strength to continue for some time to come as we continue to track as well what's happening with yields.
Yeah, and when it comes to dollar yen in particular, of course, that divergence is really hard to close, right? With the BOJ in no rush at this point to accelerate into the next steps of tightening it all. But take a look at how treasuries are faring at the moment. We saw quite a bit of long duration demand jumping in that 20-year treasury auction overnight, and we still are really seeing that play out on the back of these Fed commentary. Let's go more on the strength of the dollar, though. Bringing Bloomberg opinion columnist Dan Moss, and we've talked about some of the structural reasons why we continue to really see this play out.
Yeah, so let's go back in history a little bit. We heard a lot during the 1990s and the early part of this century about the US strong dollar policy. One of George W. Bush's Treasury secretaries controversially said, it's actually not a strong dollar policy, it's a strong economy policy. And that's really what we're seeing now. The US is showing surprising resilience. If anything, it is re-accelerating. Inflation is coming down significantly, but not quite to the point that the Fed wanted it to see. The economic performance elsewhere has kind of been lifted up by the United States. Germany's limping along. Parts of Asia are doing so-so. China's okay, but disappointing relative to historical norms. So that's where we are. That adds up to dollar strength. There's not a lot you can do about it. The dollar is the dominant reserve currency.
Dan, very quickly, that shift through Asia, what are the options in about 20 seconds?
The options are a combination of things. Intervention can work in a measured way in the sense that it buys you time while you wait for other things to happen. perhaps a few prudential steps to make short sellers think twice about some of those trades. But burning through your reserves a la 1997 is not the way to go. That is pointless.
Taking a look at how markets are faring. We're 30 minutes into the session for Tokyo, Seoul and Sydney. At the start of the day, we're seeing a little bit of mixed trading. We've got the broader index just fractionally in positive territory, but losses on Wall Street overnight and really led by big tech in particular. It's not just that story of the Fed and these expectations around rates. It's also that earnings theme that's certainly influencing the moves here. We had ASML, for instance, that's Europe's most valuable tech firm, seeing its orders tumble in the first quarter. Weaker outlook as well. China sales being hampered by US export control measures. Nvidia also down overnight. You are seeing it chip stocks in the red so far, but it's also that key theme of that competition war between China and the US as well. And to that point, Bloomberg has learned that the US chipmaker Micron is poised to get more than $6 billion in grants from the Commerce Department to help fund domestic factory projects. It's part of the Biden administration's wider efforts to boost production on US soil. And let's get analysis with Corey Johnson, Chief Market Strategist at the Futurum Group. And Corey, I'm curious for your views. Of course, we're still getting details on these chip grants, these loan guarantees as well. But do you think that these will substantively help keep the US ahead in the chip race with China?
Well, the U.S. is not ahead in the chip race with China. U.S. is a very de minimis portion of the international chip creation. And I think the idea here is to get the U.S. back in the game like they were decades ago. We knew the Micron money was coming. Micron has talked about it in the quarter. And it was one of the many companies we've heard talk in their earnings results over the last, I'll call it 6 months or so, really wondering when the money was going to show up, knowing that the government was looking at their applications, expecting approval, and maybe even having received some hints that those applications didn't look too bad. But Micron, Intel, as well as a lot of international players we see getting money. Global Foundries, we mentioned, we know they've already got, they were sort of the first out the gate to actually get the guarantees. But Micron ought to be happening any day.
Yeah, and as we know that they're pledging to build several more factories here. Yes, as you said, the US sort of perceived to be behind, but generally, when you take a look at what you see between, say, countries that are increasingly tying their tech futures to the US, Japan, Korea, how do you see those companies as well sort of managing that very difficult balancing act between Beijing and Washington's needs?
Yeah, you don't have to wave a flag to want to have dispersion in the production of semiconductors, because what we all went through in COVID and what we're still going through with the economy right now is the shortage of semiconductor production and the inability of manufacturers all over the world to get semiconductors that were manufactured in China and in Taiwan. And the result of those supply problems have been lasting for years since then. And the world has really caught up to that. And so you see programs in South Korea, in Japan, yes, and certainly in the United States to try to encourage semiconductor production that it's going to happen all over the country, all over the world, I should say, and indeed all over the United States when it comes to the United States. And it's so important because the economic results of the entire world have been slowed by the inability to get semiconductors because production was so concentrated in so few places.
The Huawei breakthrough chip, I think, really stunned a lot of people, right? And I know there's sort of separate debates about whether they'll be able to do that at scale and what comes next. But I do wonder, particularly we had the numbers from ASML as well, suggesting that China still remains this dominant market. Is this kind of program, the grants that we're seeing, is it really making headway in terms of, as you say, even gaining that advantage?
Well, let's separate those a little bit. What we saw, the results from ASML today, is it today, is it yesterday, is it tomorrow? I don't know. It's like sometime in the last 24 hours. We got these results, because right there in Holland, and I'm in San Francisco, and you guys are on the other side of the Pacific Ocean. So whatever time it was, about 24 hours ago, we got these ASML numbers. Really, really interesting when you dig into the details, because what you saw was a big improvement in their overall business in China in terms of the number of units they were selling. But EUVs, of course, have never been sold into China. So you wonder, what are they buying in China, and what is China's play here? Because they cannot get the greatest manufacturing machines available from ASML, those EUV machines, or even sort of the next level down. So what you see is China trying to get whatever they can to make the best chips that they can, but maybe starting to recognize that they're not going to get the best and greatest manufacturing capacity from ASML's EUV machines. But even if they're not going to have those kind of advanced semiconductor manufacturing machines, they're going to have a lot of machines that can kind of be the next tier below. Now, can they find some way to bundle all those together with chiplets and come up with some fantastic production to rival what's happening to the rest of the world? Probably not. You mentioned the Huawei production, and it could be impressive. We'll see if it happens at scale. But you really see China rushing to get what they can right now, perhaps and reasonably so, concerned about further sanctions down the road.
You talked about one of the overall benefits as being greater predictability, right? Does that predictability include a bifurcation in terms of these ecosystems?
It might. I mean, it starts to hint that way, right? When you look at what's happening, both what you mentioned, ASML, we've been talking about, when you look at NVIDIA's production with sort of the latest and greatest chips available for data center and the ability of those chips to create the best things in AI. If the future of compute is AI, that the future of the compute is on NVIDIA chips, and those chips and nothing like them is available anywhere else from any other manufacturer in China or outside of China, then if China can't get access to that, they're just not going to have the compute capabilities that the rest of the world has, and frankly, the sanctions will have worked.
Yeah, against that risk of sanctions, against the sort of demand picture as well, how does this play into TSMC's earnings that are due out later? And I can see here in your notes that you're saying that this is a critical data point for the global chip market.
Yeah. Well, because what do we talk about all day? AI. I mean, I'm here in San Francisco surrounded by startups and companies working in AI, the biggest companies in the world like Microsoft and Amazon and Google trying to catch up in AI, trying to get to the cutting edge in AI. Everything's about AI and all this AI spend. And then we get the numbers from ASML today saying, yeah, it's not happening yet. And so it's kind of a shocker when we saw those numbers today. So you wonder, is TSMC going to confirm that the AI spend is going to be slower than we thought it might be? Or are they going to say the ASML numbers are one and done? And indeed, ASML on the call said it's going to happen this year. It's just not going to happen this quarter. So we want to really get some confirmation here. That was a really dramatic result this morning. And I think generally the market kind of believed it's going to happen sooner, not later. But a bad result from TSMC or commentary that suggests we're going to have to wait. And indeed, we're seeing little pieces of this, right? We're seeing rumors of delays of Intel factories in Columbus, Ohio. I've been to those building sites, and they're building a lot. But we also know it's going to happen more slowly than we might have expected. So the pace of the build-out will be maybe not confirmed, but we'll have a lot more data. We'll have a second dot to connect, and an important one when we see the TSMC numbers shortly.
Yeah, we know TSMC, of course, is one that's got projects underway in the US, Japan, Germany. Yeah. But what are you expecting to be signaled on CapEx in particular?
Well, certainly the CapEx number is one of the most important numbers here. I'd love to know a little bit more about what the impact was of the big earthquake that happened. We thought it was de minimis, but this would be a time for them to tell us if that's not the case. And yeah, there's spending plans going forward, and the timing of those plans are so important. What they're doing in Arizona with money from the CHIPS Act, but of course, TSMC is saying they're going to spend about $10 for every $1 that comes in from the U.S. government. And it's a very encouraging sign for what they might be doing, but we don't want to wait. We want it all, and we want it now.
Corey Johnson, Chief Market Strategist at the Futurum Group, there with us. We appreciate your time. More to come here on Daybreak Asia. This is Bloomberg. We are seeing a statement from the PBOC released via WeChat. This is a picture when it comes to dollar trading against CNH at the moment. The PBOC says that to prevent unilateral consensus on the yuan exchange rate, to prevent the risks of exchange rates overshooting, they'll closely monitor these factors as well. Also talking a little bit about loans, transfers, relending, and the efficiency of financial resources there as well. So this really the latest as we see it, with a number of central banks and policymakers across the region coming out to talk about exchange rate volatility. And we know that the moves that we've seen for the yuan have been almost as big as a factor when it comes to the correlating moves across Asian FX and the downside pressures as we've seen in the advancement of the dollar. We've seen the offshore yuan just advancing really this week, seeing its best performance in over almost a month, in fact, with that dollar decline for the first time in 6 days. The cost of funding for the yuan climbing towards a 6-year high, and that is, of course, making it more expensive for speculators to put in those short positions there. But we have really kind of seen very sort of limited communication there and moves on that fixing. But we're hearing from the PBOC there talking about the risks of an overshoot on FX. So, Belle, just adding to the chorus that we're hearing from other policymakers warning against one-way trading when it comes to Asian FX.
Yeah, that's right. We know the finance chiefs of Japan, South Korea, they're certainly concerned by their local currency moves as well. But let's get to some of the corporate stories that we're tracking this morning and a couple of Bloomberg scoops as well. We've learned that Saudi Arabia's Neom City project is planning its debut Riyal bond sale for later this year. That's as it looks for more funding sources for the $1.5 trillion worth of construction projects that are planned. Sources say Neom's appointed banks, including HSBC, to advise on the sale of Islamic bonds, which could raise as much as $1.3 billion. Documents seen by Bloomberg show Jane Street generated over $10 billion in net trading revenue last year. That was among financial markers the firm disclosed to investors as part of a debt deal that it's seeking. It's a rare glimpse into the mechanics of what is a notoriously secretive firm, which has steadily expanded to make markets in areas including ETFs, stocks, currencies, derivatives, and bonds. UBS is said to be planning another round of job cuts as it continues to trim headcount following its rescue of Credit Suisse. Sources tell Bloomberg the layoffs are expected to affect more than 100 positions across its global investment bank in the coming weeks. Cuts are expected in its wealth management unit and its markets units as well. And JP Morgan CEO Jamie Dimon has been laying out his vision for the future of money in an AI world. Bloomberg Originals spoke exclusively with Dimon to kick off season 2 of The Circuit with Emily Cheng. She asked him about opportunities and what are the risks ahead.
The best thing is be prepared for any business. When you think about risk, think about things that can go terribly wrong. Can you survive them? It could be technology, it could be government regulations, it could be literally the weather. If you're a restaurant, that might close you down. If you lose this week's business, you're out of business, you don't have enough cash. So you should think all that through.
Bill Gates once said, banking is necessary, banks are not. To what extent could AI or fintech replace traditional banks?
So I think, first of all, I remember him saying banks are dinosaurs. I spoke to him about it in 1997, and he was dead wrong. He'd probably agree to that. But he's not wrong. The technology changes everything. And if anyone is complacent or arrogant or think that because you have a big position today, you're going to have a big position tomorrow, that's a mistake. But then you have to define, what is banking? Someone's going to have to hold the money. Someone's going to have to move the money. Someone's going to have to raise the money. Someone's going to have to do research around money. Those services will still be around. And, hopefully we're doing it and using a lot of tech to do a better job at it. But I've always thought it's very possible that some tech thing, disintermediates a piece of that. And I've been writing about, big tech going to our business. We got fintech, but we also have big tech. And they will embed payment systems in there. And some are going to white label banks, kind of what Apple did. They have the right to do that. I'm not against that. I would be against unfair use of their position to dominate us in a business.
Well, Apple is going deeper into financial services.
No
Do you
question.
worry about the Bank of Apple?
Well, we're going to compete. So they have a tough competitor, but they hold money, move money. Yeah, they're a form of a competitor. We also partner with them, but I'm very used to partnering and competing with lots of people.
Existential threat?
I don't think it's an existential threat, but I think if we were complacent about it, yes.
And you can watch that interview in full on The Circuit with Emily Chang. It's on Bloomberg Television at 6 p.m. Wednesdays, at 6 a.m. Thursday, if you're watching from Hong Kong. And you can catch us live and see our past interviews on our interactive TV function. That's at TV Go. You can also dive into any of the securities or the Bloomberg functions we talk about. You can join in on the conversation as well. Send us instant messages during our shows. This is for Bloomberg subscribers only. Do check it out at TV Go. This is Bloomberg.
All right, taking a look at crypto prices this morning. You got Bitcoin holding above 60,000, but actually it briefly dropped below that overnight in the session. Volatility is increasing ahead of the halving event, and we can get to that in just a moment. But certainly it has been that big run-up, Heidi, that we've seen in crypto prices, given that amount of enthusiasm we're seeing around ETFs.
We've seen digital asset platform Grayscale, for example, saying it's looking to ride the recent rally in crypto markets as US spot Bitcoin ETFs attract more attention. Their CEO, Michael Sonnenschein, spoke to us exclusively about the company's plans to expand product offerings.
Spot Bitcoin ETFs in the US were only introduced at the very, very beginning of the year. And so in the crypto world, what is about 3.5 months is in the real world about a full year of time. So it feels like they've been around for quite some time, but it's actually still a very new market. When we think about who is involved in Bitcoin ETFs today, it's still a relatively small audience. And so I think we're just at the end of that first phase of adoption before we start to see Bitcoin ETFs being adopted into model portfolios, making their way onto wealth management platforms, and ultimately being made available to a wider audience of investors.
And to reach that audience, what are you offering to compete with your rivals? When do you expect your fees to come down? Because if I'm right, they're some of the highest.
Yeah, well, so the Grayscale Bitcoin Trust, ticker GBTC, is the world's largest Bitcoin ETF, and we've been around since 2013. When I look at how the product has matured over time, for many investors, it's been a fantastic investment. It's returned over 49,000% since inception, making it the best performing publicly traded investment product. But our focus on Grayscale, isn't just stopping with GBTC. It's about continuing to expand our product family. We recently filed for the introduction of another spot Bitcoin ETF, the Grayscale Bitcoin Mini Trust. So pending regulatory approvals, we'll be able to have multiple products in market to allow really investors to, meet them where they are in their crypto journey, and ultimately have different products for different investors with different strategies.
That was the Grayscale CEO, Michael Sonnenschein, speaking to Bloomberg's Lizzie Burden there. And it is, as we said, that big countdown to the Bitcoin halving. Different ways that we can track that. No precise time, but I'm just taking a look at Binance, and they're saying 2 days, 25 minutes and 31 seconds at this point in time. So let's get more on what the halving means, especially for ETF flows and ETF interest as well, with our ETF analyst, Rebecca Sin, joining us this morning. So yeah, we know this halving is coming up. What's different this time around is that Bitcoin hit the record high ahead of the halving event, given the ETF optimism. But how much Bitcoin is there really left to be mined at this point, and what's the impact as well for these funds?
So what most people may not realize is that 23% of Bitcoin is actually lost, nowhere to be found. And so in terms of how much Bitcoin is actually left, it's only 6.6%. And so it's roughly 1.4 million Bitcoins out of the 21 million Bitcoins in total. And so ETF accounts for roughly 4% of the Bitcoin ownership distribution, but the majority of the Bitcoin is actually held by institutional individual investors. So roughly 60% of that is going to individuals holding this. And so what we will see is as the price continues to go up, these individuals may start selling their Bitcoin. And as the ETF adoption increases, we may see more liquidity in this space.
What flows have we seen from Bitcoin ETFs more globally, and where are we seeing the demand come from?
So if we look at flows globally, we've seen roughly 30 billion of inflows going into Bitcoin ETF. A lot of this is from the US spot Bitcoin ETF that launched in January. But as Michael was saying, for Grayscale, they've seen roughly $16 billion worth of outflows. And the main reason for that is they are priced the most expensive. Grayscale's ETF is priced at 1.5%. And so that's why they are now launching the mini version. They haven't disclosed the price on that yet, but we should expect it to be under 30 basis points, which is where the other people are competing against. So for instance, BlackRock, which is the largest, is currently priced at 12 basis points. ARK 21 shares is priced at 21 basis points. And so from a flow perspective, this has really been a huge demand and more than what everyone expected. So net, we've seen $14 billion worth of inflows into Bitcoin ETFs globally. What this means is if we look at where flows were 1 year ago it was only 15 billion. So 4 months into the year, we've already reached where flows were 1 year ago. 3 years ago, it was only 18 billion. So we've really seen a huge demand for Bitcoin ETFs globally. And I think with Hong Kong having just approved the spot Bitcoin and Ether ETFs, this will create more enthusiasm and more demand for the product.
What do you think, though? Because we already have futures ETFs for Bitcoin and Ether in Hong Kong that haven't really attracted very much in the way of inflows. Why do you think a spot ETF for those tokens would be different?
I think if we look at the Hong Kong mechanism, like if we look at Asia Pacific, there are currently only 5 ETFs, and they have roughly 250 million in assets under management. Most of them are futures-based. And so one of the concerns with futures-based, as we've seen with the U.S. When they launched their futures, ProShares was the first to launch futures-based, was that people were concerned about the roll cost of the futures. So whenever Bitcoin futures roll, there's a cost associated with that. And therefore, the ETF may trade at a premium or discount based on where futures were trading. And so I think now that there's a spot Bitcoin coming, people feel that it may be a little bit cheaper. You don't have the roll cost association. And if we look at the U.S., there was really a fee compression and a fee war with the ETFs. And so with the Hong Kong market, it will be interesting to see where Bosera, China AMC, and Harvest price their ETFs at. And we could see potentially a fee war happen like what we saw in the U.S. In Asia, the fees are typically higher on ETFs. So, for instance, on looking at the Hong Kong market, on average, the ETF fee is roughly 95 basis points. And that's because in Asia, you have to pay distribution fees. You have to pay rebates. And so that's why in Asia Pacific, we've seen the fees are generally a lot higher. I have the saying that says, crazy rich Asians don't care about fees. And they actually prefer the higher fee products. The higher the fee, the premium the product. And so in Asia, if you price it too cheap, people actually get concerned. And they're like, oh, there's something wrong with it. It's a little bit too cheap. So anything that's free doesn't really catch the demand. So I think the demand should increase, and we've seen a lot of demand for spot Bitcoin, so it should be interesting to see what happens.
Bloomberg Intelligence ETF analyst Rebecca Sen there with us. Take a look at some of the stocks that we're watching as markets open in Hong Kong and mainland China in the next hour. Asia chip stocks in focus on the back of Bloomberg reporting that Micron is poised to get more than $6 billion in grants from the Commerce Department as soon as next week. Watching TSMC's results out later too. This is Bloomberg.